Investors and traders, welcome to the channel Market Chart Pattern. As promised, today we'll be taking a look at a couple of stocks that we have been following for quite some time from a longer term perspective. This video is for educational purposes only and it is not a financial advice. So we are looking at the weekly chart of the stock Apple. If you have been following our channel for quite some time, you'll notice that back in late 2021, so around November of 2021, we had a video where we looked at longer term cycles that existed in the stock. I'm not going to go through each and every aspect of that, but I will post a link to that video. So what we are looking at is basically this main ABCD formation highlighted in this dotted lines here. And what we have here is basically a one-to-one projection, which we like to call ABCD, and that was taking us to somewhere around 187 level. However, we also had some uh, lower degree cycles coming together as well. So at that time, based on that, we were able to look at anywhere between 181 to 183 as the were top of the cycle. And in fact, this is what panned out. And what we have seen since then is that the stock topped around um, January of 2022. So pretty much when the overall market topped, the S&P 500, for example. And since then, it's been in a big trading range. And what is really important for us is that this level, which you see around 125, 126, this is where we have a number of these Fibonacci ratios coming together and it's forming a zone of very strong confluence coming together. As you can see, there are a number of these ratios coming together here. What we have seen is the market actually retraced back to these key levels, and then there was a strong bounce off that, which continued for several weeks, as you can see. So starting from 13th of June, ending somewhere around 15th of August 2022. And then what the market has done is actually has come back and retested that, tried to take the low out, couldn't do that, moved higher, closed higher, and we had a reversal of that. And in fact, what it did is formed a double bottom. In the green lines, what you see is another ABCD formation, a one-to-one projection, which is around the same level of 122. But we got around till the low was $124.17. So, what does it mean? It means that actually uh, it's really key for the stock, for Apple to hold these levels and this double bottom formation. And from here, we should actually be looking for higher prices to come, perhaps. And what is important is really that this is a trading range. So the bottom of the range has been tested. The price is likely to move higher and test the top of the range. So I'm just going to zoom in now here. What we have is very strong week close on the 30th of January 2023. So very the week of 30th of January 2023 closed very positive. A big candle here. It also took the highs of the swing out, so market structure changed. So let me actually double confirm what was the high. High was 157.50 and 157.30. So in fact, it did not take the high out, so that is something to be noted. So it still remains a retracement of this. Then what has happened is that we have had one, two, three inside bars. In fact, four. So pretty much the whole month, four weekly bars inside, and then this is the 20-day weekly average. Moving average. And what the stock did last week is, here we go, destroying a retracement right at the 382 and also at the confluence at 20 week moving average. The stock found good support and read it higher. So let's take a look at whether this high was taken out 151.30, 151.11. It hasn't done that yet. It hasn't taken the high of this bearish candle out yet. So this is something we'll be watching next week. So if in fact that is a, let's say, a start of another ABCD, so I'm going to, let's say, call it A, B, C, then a one-to-one D projection is going to be right towards the old highs. And I'm gonna put a question mark there because we don't know whether the price will actually get there. So if this high gets taken out, then it will be an ABCD a projection higher. Then we go back to our highs, and then we just take a Fibonacci retracement. And what we can also see is that it will be right at the 78.6% Fibonacci retracement. Also, something to point out is this: we have some gap here. It's also possible price actually goes and target that, and also these gaps get filled. So we'll have a number of things coming together. So what we are watching for is about 171 to about 175 roughly. So 171 to 175. I'll put a question mark. That possibly might be a retest of towards the top of the range, and that is kind of most likely scenario. In fact, if this ABCD structure is valid and this support of last week or around 145 is not taken out to the downside, so this is what we'll be expecting, perhaps a retest of this of the highs in this trading range. Now, the key thing is that if the market convincingly takes out these highs out of, so break out of the trading range, there's a possibility that if in fact it does that, the most breakouts actually fail and the price is likely to come back into the trading range and then make a move higher. But assuming that if that trading range gets broken out of, then that is very positive for the stock. But it remains to be seen whether in fact that will happen or not. So we'll take one thing at a time. So for now, that's the kind of thing we are looking for in Apple. And based on the cycle, we had this 183 region to in fact 187 kind of region as possible top for the stock. And since then, that time, for quite a long time, actually, the price is actually moving in a range. So this is what we are looking at in the Apple stock. So the key level for us to watch is the support of 144, 145 level. If that is not broken, then we believe that we are actually in this one-to-one ABCD structure higher, where the D point will come around 171 to $175 per share. That will be a confluence level with the 78.6% Fibonacci retracement coming at around 171 level, possibly even a double top here, and there's a gap which could get filled. So this is what we are looking at in the Apple stock. Okay, so guys, we'll move to Microsoft. So guys, for Microsoft, I'm going to do something a little bit different. I'm going to go to the monthly chart. So what we are looking at is the monthly chart, so really long-term monthly chart of Microsoft, going back right to the lows in March of 2009. So that's going back several years, more than so here the stock at bottom, and what has been happening is we have seen a nice, really nice, beautiful um, rise in the stock. Not discussing the fundamental here. The recent pullback has been to the 38.2% Fibonacci retracement right from the bottom of 2009. And the important thing is that this low has held around 221. So I'm just gonna go and zoom in now. So this is something a key to remember, that $220 per share level being 38.2% Fibonacci retracement of the 2009 lows. So zooming in further, what we have is also a 61.8% Fibonacci retracement coming from the March 2020 lows. So there's something about the month of March 2009 big bottom. Then we had a big bottom of March of 2020. So the COVID lows highs. So this forms a confluence level here, and also what is good to note is that The price actually rejected the lower price around 215 on a monthly chart. The month closed really strongly in November of 2022 for this stock. Then there has been, basically a retracement. The price tried to test the lows again, rejected on the monthly basis in January of 2023. And something to note, I'm gonna zoom in more. What we have noted is that, look at this trend line here. This is the downtrend line. We have had a retest of this. So this is the third point test where it tested it one time around here. So let me just copy this. Then, oops, come on. All right, guys, I'm gonna just leave it there. Um, One time, two times, three times, four times, and here it closed higher. In fact, in the month of February, it went pretty high, and then it just kind of retested here, closed a little bit higher, and beginning of March the stock has performed a little bit better. So let's do a retracement to see what these levels are in fact. And what we see is that basically, just going back to the lows, uh, at a very high level, it's pretty much around the 50% mark of this. um, so this looks like that actually, as long as these lows, so this is like a really long-term stuff, we're talking about monthly charts going back to 2009. This low of 215 and 220, this is held. And there is a very nice trend line from going back to the December of 2018 as well. The stock actually looks pretty bullish, given that these lows are held. And what it could mean is just an ABC structure from 2018 December lows could actually take it much, much higher, just if that in fact is the ABCD, which we need some further confirmation. So let me actually draw some retracement here. So what we have seen is that in last month in February, it backed off from the 38.2% Fibonacci retracement. But the good thing is that the highs of December 2022 were taken out, and also the highs of September 2022. So that is like, potential change in the structure. So this is a monthly, really long-term chart. So we have to be patient to see how things develop over months. So if we if our analysis is correct, given the support remains intact, and then price is likely to target the highs of around 294 to 298, so roughly $300 per share level. That is the 61.8% Fibonacci retracement, and that could be a pretty strong resistance level. So I'm just gonna mark the challenge of highs of about 294 to 300. I'll put a question mark because we don't know as of yet. We need further evidence, but looks like that's gonna be the zone the price might try to actually tackle. And a lot depends upon the overall market as well, which we try to look at on a daily basis. Particularly the things happening in the bond market will influence a stock market for sure. So, from a longer term perspective, this is what we are looking at in the stock of Microsoft. And the key is, this is the key support. Let me actually write it here. Key support. As long as this support remains a support, um, I think 294, $300 per share would be the next target to look at. And then at lower levels, we'll look at whether there are some other ABCD cycles in operation, and we could have more targets to look at. But for now, this is what we're looking at in longer term in stock of Microsoft. So guys, thank you very much for watching the videos. If you like our analysis, how we look at the markets, how we look at the pattern formations, we use Fibonacci retracements, expansions, and extensions to figure out what the price is likely to do next, then please do subscribe to the channel. If you like this video, then please do click on the like button. That way I know that people watching the videos actually like these videos, and it just encourages me to bring out more educational videos for you guys for educational purposes. And if you're interested in knowing that when the new videos are posted, then please also hit that bell icon button. That way you will know when the new videos are posted, because the algorithm is such that you might not find out when the new video is posted. So this is what we're looking at in these stocks. So guys, thank you very much for watching the video. Good luck and good trading.